All eyes will be today on the Reserve Bank of India as it is scheduled to announce its monetary policy review. As Viren was mentioning over there, RBI Governor Raghuram Rajan is widely expected to cut interest rates, a move that will bring down EMIs on home loan borrowers and help companies raise cheaper funds to aid expansion plans. Inflation rates in the country are currently at historic lows. The plunge in inflation rates has triggered hopes that Rajan would likely cut interest rates in the monetary policy review. The government has also made it more than obvious that it wants the RBI to cut rates, given the wider elbow room the central bank enjoys from the current situation. Finance Minister Arun Jaitley last week asserted that common sense says the interest rates should come down. Corporates and individual borrowers will be hoping for lower borrowing rates to help their plans to buy houses and goods such as cars. Let us now get you an explainer, because all this might sound Greek till the time we tell you how this rate cut is going to impact you. Lower EMIs on cars, auto loans, increased spending helps economy. Then more jobs will be there if companies invest more, which means the money will start rotating. There will be a lower rate on fixed deposits, lower rate on government and company bonds. That's a negative actually if the rate cut actually happens. All right, let's go across to Shweta Punj. Now Shweta, we have in the past also discussed quite elaborately how these rate cuts impact people, how it impacts economy. But what is more important to know this time around is how the RBI could literally be forced by the government, or at least that seems to be the drift of the conversation as far as the government is concerned, to literally ask the RBI governor, this gentleman that you see on the screen right now, to enter into this, interest rate cut.
Right, Sanket. There is an enormous amount of pressure on the RBI governor to cut interest rates. Of course, the government has always put pressure. Over the years, we've seen they've become very overt about these things. Earlier, it was done in very subtle ways because RBI is an independent authority, and such a loud clamor for interest rate cuts is quite unique. I must add that. But let me just say one thing, that the RBI governor is going to be closely watching the inflation, the consumer price index, before he decides whether he should go ahead for an interest rate cut or not. And yes, we have seen inflation come down, but from what the governor has been saying, that the impact of a bad monsoon is going to be visible later, and he probably will not be very aggressive in cutting interest rates. And I'd also like to add one more thing, that cutting interest rates is only one part of the story. It's a significant part of the story, but it's only one part of the story. There are several other factors, that will determine the growth rate that India experiences. And a lot of that lies with the government, that lies with the finance ministry, that lies with the fiscal policy of how India decides to move ahead.
Absolutely, Shweta. Do also, for the benefit of our viewers, tell us what will be the pros and cons if there were to be a step taken in this direction. Because one very significant point that you have in fact mentioned in the past also is that rate cut is just one part of the story. It'll also be interesting whether banks or institutions actually pass partly or, in full, whatever the rate cut benefits are provided by the RBI.
You're absolutely correct, Sanket. So in the past, we've seen that the banks have been slow in passing on interest rate cuts to the consumers. And partly because they themselves have no room. Their balance sheets are so stretched. They are really battling with many, lot of NPAs, bad loans. So that's a fundamental issue that needs to be sorted for banks to start passing on interest rate cuts. So they have been slow. So in terms of in the last 1 year, we've probably seen a very tepid movement on that front, and that has meant that consumer demand has not picked up. So even if the governor goes ahead and cuts interest rates by 25 basis points, we will not see a sudden uptick, in terms of consumer demand or interest rates coming down, and you buying a home or a car or something, a purchase that you've been putting off for a while, simply because it does not really does not put more money in my hands. But having said that, it will give a signal to the world that India is moving ahead and it's back on the path of cutting interest rates.
Okay.
Which businesses say is significant, because the fact also is that in India, we as consumers and businesses battle with some of the highest interest rates in the world. That's the fact and that's the reality.
Absolutely.
So that would be a significant signal.
Absolutely, Shweta. Many thanks for analyzing and simplifying it rather for our viewers.